Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. And by the way, if you don't know who I am some random dude on the internet who paid off a mortgage in 2 years and 9 months. And I just want to share some thoughts about why so many people struggle with finances and debt. And here's the thing. Here's the sad truth. You can blame all the big banks as much as you want about how they're predatory, but the truth is, yeah, even though they're somewhat at fault, the real enemies, and I hate to use that term, are the people around you because they want you to fail. I mean, let's be honest. Like, it's kind of like doing a diet. Have you ever like been in a group setting where you're like trying to like eat healthy, and then they're like everyone's trying to peer pressure you to like eat like junk food, cake, fast food? It's the same thing with your finances, right? You try to get your finances in order, like people will act like you're the dumbest person on earth, and then now everybody's struggling with their finances and debt, right? And I think it's kind of sad that, and I'm just telling you the truth, right? A lot of people will get angry at me for saying this, but it is the truth. And I asked ChatGPT about this too, about how, you can blame the bank as much as you want for people being in debt, but the fact is communities and families don't try to educate and support each other to be financially free. It's sad but true. And this is why most people will never be financially free. It's not because they don't have the knowledge, it's because they don't have a community that values them being financially free. So it's basically crabs in a bucket. In fact, pretty much every society has a version of this. Like in non American English speaking countries like New Zealand, Australia, Canada, and the United Kingdom, they call it tall poppy syndrome, right? If your poppies grow too tall, they got to chop you down, right? And that's essentially why so many people struggle. But I know there are a few of you out there who want to get out of debt, so that's why you're here. And I congratulate you because most people, uh, they this is how they think. If they see you getting out of debt, they feel like they have to sabotage you. And I'm not lying about this. This is why like so many people um just keep like if you mention like, hey, what about like some alternatives as finances, it always somehow ends into argument. You ever notice that? Like it's really weird and wicked. But I'm just telling you the truth. So, all right, before we get started, let's read ChatGPT's answers of why about the question just I just asked about how communities are to blame.
You're absolutely right to highlight that personal, familial, and community responsibility play a critical role in financial literacy and freedom. It's easy to point fingers at external systems, like banks or credit card companies, but the truth is that systemic issues and personal community actions are deeply intertwined. Banks and financial institutions often design products that profit from debt and financial ignorance. Sure, but families and communities often avoid discussions around money, turning it into a taboo subject. Schools largely fail to teach financial literacy in meaningful ways. Peers can reinforce destructive spending habits, keeping up with the Joneses. Culture often promotes consumption over saving or investing. At the same time, not everyone grows up with role models who understand money. If your environment never showed you how to budget, build credit, or invest wisely, you're often starting behind. So, while it's valid to criticize exploitative financial systems, real change also demands community level efforts, mentorship, open conversations, shared resources, and a cultural shift toward financial empowerment. Would you like a breakdown of how communities can practically foster financial education and support?
I'll say this one more thing. Nobody at the bank forces you to sign the dotted line, but family members may pressure you to get a mortgage, even though you might be paying 50 to 150% interest over 30 years. Let's see what we get here.
Exactly. CAM. That's a powerful and often overlooked point. Banks offer the loan, but it's often family and societal pressure that pushes people to take it. The dream of homeownership is deeply emotional and cultural. For many, it's seen as a rite of passage or proof of success, even if the math doesn't make sense. Here's the reality you're calling out. A 30-year mortgage at 6 to 7% interest means you can pay double the home's purchase price over time. Yet, family or cultural expectations may frame renting as throwing money away or being irresponsible. That pressure can override someone's personal assessment of whether the timing or cost is right for them. And the banks, they're happy to lend as long as you're qualified by their criteria. Whether it's good for your long term financial health isn't their concern. So you're right. No one forces the signature, but emotional and social pressure can be just as strong as coercion. This ties back to your original point. Without open, honest financial education and support from our families and communities, we often get set up to make massive long term commitments we don't fully understand. Would you want a plain language breakdown of how mortgage interest works and how to analyze whether it's really a good idea? Could be useful for pushing back on those pressures with facts.
Right. And so I'm just to be honest, I don't know anybody else who paid off a mortgage in 2 years and 9 months. Right. And this is why I have a rule that you succeed first and then tell other people. The problem is people are always trying to ask other people opinions and then they never accomplish their goals. Right. So that's why leadership uh, is necessary, the skill of being a leader in order to do things that most people won't do. Okay. All right, so let's go ahead and get started. So, velocity banking, what is it? It's a debt payoff strategy. So first step is you create a budget, which so you have your income here, your expenses, and then you have your leftover savings, and then in your expense breakdown, because you this is a debt payoff strategy, you list every single debt that you have. So we have two credit cards, an auto loan, a student loan, and a mortgage, and then we have our general operating expenses. So by the time we're done paying off debt, all we should have is this left. Okay. So, with velocity banking, we have the same income, we have the same expenses, but we're not going to save money. This is the thing that scares a lot of people because when you just kind of showed them this side by side, oh, what's better? Like $49 of savings or zero savings? Like, well, you got to save money, right? Remember Dave Ramsey's like first baby step is saving $1,000, and then like, how are you going to save $1,000? When it's good you're if you save $1,000, you're gonna spend a lot of money, on interest trying to save $1,000, way more money on interest to the debts than the $1,000 you would have saved. Alright, so what we're gonna do, and this is how you would see how this would work in real life. So you can see this is my checking account here, $0 saved. Money comes in and then money goes out and it goes to something called a line of credit. And then we're going to calculate a number called cash flow, which looks like the savings number in the beginning, but we're going to learn how to increase it with the help of something called a line of credit. So, what's a line of credit? All it is a financial tool where you could borrow money, pay back, and then use it over and over again. So, this is my 175,000. Actually, that's not. Not even my line of credit. This is a fake line of credit. This is actually my $373,500 home equity line of credit. 373,500. And so with this $372,500 line of credit, I could just go to the bank's website, click a button, and they'll dump up to that amount into my checking account at an 8.5% interest rate. Right. And my previous home equity line of credit was for 280. And I actually have, so if you take a look here, $731,000 in lines of credit, and this includes personal credit cards, business credit cards, right? Personal lines of credit. You see this $20,000 line of credit that I got, and then this is my $373,500 line of credit. And so, if you want to know how to get credit in general, okay, here's the ultimate rule of the banks. Okay, banks don't lend money to people who need it. You see how that works? They don't lend money to people who need it, and so if you need money and you go to a bank, they'll look at you like you're the dumbest person on earth. That's what you have to assume. And so the way that I got all of these lines of credit is I just went to a bank or a credit union when I did not need money. Okay. When you don't need money, that's when you get the money. When you need the money, you don't go to a bank because they will deny you because they see you as a huge risky borrower. They will say, no thanks. You need money? We in a charity. Go away. Right. And that's why a lot of people don't understand how banking works, and a lot of people struggle with the credit game. I mean, how many, when have you heard from your general family members who haven't studied this stuff? Oh, yeah, go to a bank when you don't need it. Like, you probably never heard that one, right? And so that's how we get all of these lines of credit. And we're going to assume we have access to, I don't know, 100, we'll say $125,000 line. It doesn't even matter, right? Just a nice big line of credit. I have over $731,000. Biggest individual line of credit is 373,000, my individual home. But yes, the bank does not lend money to people who need it. If you need money, then that's a big no-no. But the reason why we demonstrate what would happen if you had a free and clear line of credit is to show you how much this would have been a lifesaver. This would have been if you'd learned this strategy from the very beginning, rather than trying to. I always use this analogy to get it in your head. Trying to get car insurance after you crash a car without car insurance. That's how the bank sees you, right? Change your mindset, get educated, right? Change your mindset, and then know how to deal with the bank. A lot of people don't want to do that. All right, so final step is, no, actually, second to last step is that we're going to move some of our debts into the line of credit. So you see here, there's a number called the cash flow index. So all this is an arbitrary number where you take the balance and divide by the monthly payment. It's going to give you a ranking. So the lower the number, the better. So that's the first debts you pay off. So what we're going to do is move these two credit cards into the line of credit. So I'm just do this right here. So we'll say 65 grand. And then guess what happens here? Oh my goodness, 0, right? So we literally went from $50 of savings to saving no money to $2,236 of cash flow. Say what? Yeah. Yeah. This is the part where if you ever show anybody you know about this, this is the ultimate clickbait moment where they'll see this and it's like, "Wait, what? Same money, expenses were shifted around, no savings, but we went from $49 to $2,236.96. And then the last step is you put your entire paycheck into the line, take your expenses out, and then rinse and repeat over and over again. So we're going to go ahead and do that. And I'm going to just do this. So to get the next month's balance, it's a previous month's balance, interest minus your cash flow, which is 2236.96. And then what we're going to do is take the average daily balance, multiply it by the interest rate, which is 0.085, divide by 12, and then we're just going to copy and paste, copy and paste, copy and paste, right? Copy and paste, and then, whoa, how long is it going to take for us to pay off our debt? It's going to take us 33 months to pay off all that credit card debt, 65 grand. We were struggling with $50 left over. We did it in how long? 33, so a little bit less than 3 years, right? 33 months, bam, 33 months, okay? 33 months, and then that's going to be 65K, and then do this right here, and then this is going to be right here, and student loan, or auto loan, student loan, and mortgage, okay? So now what we got to do is we're going to use our loan calculator to figure out which debts to pay off. So we just put in this loan calculator, what's the current month. And then we use the same cash flow index idea, right? So lowest one gives us more bang for our buck, 14 grand for $500 of cash flow versus 47 grand and 700. I'm going to take this one, move it into the line, right? And then what we're going to do is right here, and then plus 14057.31. And then I'm going to just do this right here. This can be 0. And then what's our cash flow now? About $2,700. And then I'm just do this right here. Copy and paste this number. Replace the cash flow with 2776.02. Okay. And then 38 months. paid off. So 38 months. So it took us 5 months to pay off that auto loan. So that'll be 95K. Whoopsie. 95K. Okay. And then in 38 months, so 38, 38, 38, this is going to be zero. And then in 38 months, it's all paid off. And now we got to figure out the balance of the student loan. So let's pay off the student loan now at 45 grand. And we're going to just do this right here. Control. Yep. Plus 45,300.91. And then now this is going to be 0 and 3,400. Okay, so we're going to do this right here. And this is going to be 3472.67. All right, and let's see how long it takes us to pay off the student loan. 52 months paid off. So now the only thing left is the mortgage after 52 months. And so it'll be 155K. And then after 52 months, we just put this right here, 0, 52, and 195,000. And then let me pull up the Velocity Banking Calculator. All right, so we have the Velocity Banking Calculator right here. If you don't know what this is, I got it from Renatus, and I'm actually what you call a marketer of their education, right? So if you're interested, not only learning about Velocity Banking, but some other stuff, like possibly joining a cult. No, just kidding. Like buying properties and real estate and other good stuff too. Click the Google form link below. Other than that, let me just kind of show here that all I have to do is type in the numbers, and then I think I did everything correct. We see that it pays off in 4 years. So all I gotta do is just go back here and then type in 52 divided by 12 plus 4, and then 8.33 years, and then we are debt free. All right. See how easy that is? That's so easy. But a lot of times, the people around you don't really want you to learn this, not because they understand, but because everything that most people do is fear driven, right? And then once you start doing this, like, wow, this is a lot easier than I thought it would be. In fact, I see comments all the time on this YouTube channel about like, wow, they paid off debt and it was so easy, right? All right, well, that's it, everybody. That's it for today. So this is Korean Atlanta Mentorship. Have a great day, and I will see you all on the next video.